Good afternoon, traders and investors. Will back here with another one, guys. And what a brutal day in the markets it was today, guys. There's no real way to sugarcoat this, as markets just absolutely fell apart today off of Google's earnings results yesterday, which I covered in yesterday's video. Was not a bad earnings result as a whole. Only their cloud segment missed, but it was enough to make the stock tumble almost 10% on the day today. And the rest of major tech as well had a major sell-off today. Even Amazon coming off its highs here of about 5% intraday, guys. Very, very nasty day across the board. Really bears taking control of our charts here. Today, after hours, we did have some earnings from Meta, which were very, very volatile. The stock initially popped and then dropped, and we are now considerably down on that stock in after hours as well. We only have a few remaining tech giants here. Amazon tomorrow on Thursday and Apple next week here. That could potentially save our broad market bulls from complete annihilation here. So I apologize for the use of the strong words, guys, but it's just we can't sugarcoat days like this when the QQQ has had arguably its worst day pretty much since February. And a number of other stocks, including Google. Google had its worst day since 2020. So very, very, very poor performance by our market bulls as a whole today, as our sell-off does continue to expand here. So we are going to cover all of the technicals here today, guys. We're going to cover our major indexes as usual, our major tech names, and we are going to go over a few earnings. I've chosen Meta and Hilton Hotels today for our earnings analysis here. Now, before we get into it, guys, I just want to preclude with a quick little intro. Yes, this sell-off is very painful. It's painful for you and it's painful for me, unless you guys are net short, of course. But this sell-off, I reiterate, is definitely an opportunity for buying for our long-term portfolios here. The criteria is you need to be buying companies that are positive free cash flow, positive net income, and growing revenue on a year-per-year basis, guys. Once all of these short-term catalysts get out of the way here, we have a number of things plaguing us right now, namely interest rates. We've been commenting on the yields and the yields incessant rise, especially on the 10-year, as you can see here, once again rising to 4.96, and the US 20-year as well. These 20-year yields 5.3%, right? So very, very high, guys. Once this short-term calamity in the yields wears off, I do think we are in for some good shape in the markets. And obviously, the whole situation that's going on in the Middle East right now is plaguing markets as well here. It has investors a little bit scared, but these things are temporary events, in my opinion, guys, and we should have smooth sailing here leading into the end of Q4 and most of 2024. Once again, I'll reiterate, I do not believe, and the economic data points to this as well, we should not be in for a deep, long recession like the media is sometimes saying here, guys. I do think that the markets will be very, very decent next year. We're just getting through a little bit of a period of mild earnings crush here, coupled with high interest rates and uncertainty around the Fed's final target for interest rates here, and obviously the situation in the Middle East. All of these are short-term catalysts, and the market is pricing them in very, very aggressively right now, which is the reason for our drop here. So without further ado, guys, let's get into our analysis here. SPY down 1.44%, QQQ down almost 2.5%, guys, and all of our major indexes here red across the board. You will see here on the heat map, it was a very, very ugly day with only Microsoft, due to their very, very good earnings yesterday, pulling through. But for the most part, guys, nothing was spared. Visa able to do fairly well off of their earnings. I have a couple of names, Coca-Cola, Procter & Gamble performing well from their earnings and whatnot. Few names in healthcare doing decently as well. But as a whole, guys, market was down. And look at big tech, right? NVIDIA, 4.32%. Google down almost 10%. Meta down 4%. That's not even including their after hours here. Amazon down 5.5%, Tesla only 2%, and Apple as well. Most of our semiconductors not having a great day at all. Look at these percentages, guys. Very, very deep sell-off here, right? But it is temporary. There's a lot of very, very good companies in here that are coming to attractive levels that I think would be decent purchases at these levels, right? And so on the one-day relative performance, you will see, guys, that everything in the red, led by communication services. That's no surprise. Google is your main factor here, and Meta as well, both in communication services, sending it down over 6.35%, guys. Very, very negative day. And for the rest of our industries here, very, very red as well. On the 1 week relative performance, you can see, guys, not a very good look at all, down multiple percentage point here across the week here. So very, very negative day here. We are approaching a very big level on the SPY here, very, very big level of support. I've been calling it here 420 all the way down to 404. I know it's a broad range, but this is the range where you should be expecting the bulls to put up some defense. It was resistance a lot in the past, and they should be using it as support. It's just a very, very volatile market, a lot of negativity being priced into the markets as of recently. So before we get into too much technicals, guys, let's go over some earnings, and we will start with Meta. So let's take a look what exactly happened with Meta, guys. Look at this after hours movement, right? So Meta selling off heavily during the day. Immediately when the earnings results came out, up 5.5%, guys, and then straight flush down in the after hours during the earnings call. So what happened? Meta had a double beat, guys, and their earnings were very, very solid, if I do say so myself. They beat on EPS by 20.5%. Huge beat on EPS and net income, and a very good quarter in terms of revenue as well here, beating the market expectations. Now, look at the headline, right? Meta reports better than expected earnings. Why the stock is falling. So a very, very good piece by Barron's here. They did compile a lot of the main bullet points. So let's go over them very, very quickly. I did listen into the call a bit, which is the reason for the late video here. So you will see, guys, there's a lot of good things in this earnings report here, right? So parent of Facebook, right? So Facebook here, Instagram, WhatsApp, and Threads reported revenue of $34.2 billion, up 23% and above the Wall Street consensus here. Profit was up 168% from a year ago. Absolutely fantastic here, right? And so Meta shares initially jumped on the news, but the gains were erased and more during the earning call. The turning point seemed to be a warning from the company's CFO. And when she started speaking, I absolutely was cringing, guys, about weaker advertising demand so far in the fourth quarter. We'll cover more about of that lately here. You will see that Meta in the after hours currently down another 3.5%, down to 288 right now. So let's get into the gifts of it here. Operating margin, very bullish, jumped 40%, doubling from the year ago quarter. Very, very good. A reflection of the company's year of efficiency. Mark Zuckerberg has done a great job of reducing the costs here. Costs and expenses were down 7%, while headcount at the quarter end was down 24%. So they laid off a bunch of people. Very, very good cost control by Meta. Also, their segments in terms of their daily usage, guys. So not only is their earnings up, not only are their profits up, and their cost control is good, but we also have a boost in usage, right? So daily active people up 7% from a year ago. Monthly active people up 7% as well. And your daily active users on Facebook is up 5%, guys. Very, very good. Even Mark Zuckerberg said so. It was a very good quarter for our community and our businesses, which is true. Now, two things. Reality Labs, right? So their metaverse and their Quest headset business, they had a loss of $3.74 billion, totaling for the year so far $11.5 billion that they have dumped into their metaverse endeavors without returning a profit so far. And here's the kicker. The company said that the losses in the unit would widen in 2024 from 2023 levels. So they've done a good job on cost control so far, but still, in my opinion, spending way too much money on the Reality Labs segment. And Wall Street does not like that because it's not a profit-inducing unit for Facebook so far. Analysts would rather see them more focused on their advertising segment as well here, right? So you will see here what happened in the after hours here. Well, here it is down here, right? So let me just see it real quick here. We got a comment here. They basically said essentially here that, let me just find it. Sorry about that, guys. Oh, so CFO Susan Lee said on the call that there would be some softening in advertising demand early in the fourth quarter, which she said could be related to global events, right? That's a little hint here to the Middle Eastern events that are going on right now, including recent developments in Israel, while noting that the company's direct exposure to the area is modest. And that is pretty much what killed the stock in after hours. Their commentary on the Reality Labs being more of a cost burden for Meta, and the fact that advertising demand was slightly down in relation to geopolitical events. Those were the real two things that really took the wind out of Meta sales, because all in all, across their profiting segments here in the business, you guys saw and we ran over them, they were very, very bullish earnings. It's just unfortunate the market just completely erased those gains and took them the other way. So now Facebook is once again down as a total here today, guys, almost 7.5%. Definitely not going to help QQQ, especially after Google's terrible day yesterday. So now it's all on the shoulders of Amazon and Apple as of next week. I'll remind you guys, Google and Meta, I've been saying on the channel, they were our two lead tech bulls, our two only tech bulls that were in weekly uptrends, and they have unfortunately just lost them. Just like that, poof, they're gone. So now we have to do some heavy repricing to the downside. So that's pretty much it for Meta here. We're going to keep a very close eye on this one. The next one I wanted to cover, guys, is Hilton, because I always like getting an impression, guys, of how travel and the consumer discretionary spending is going here. So you'll see that Hilton here on the day, they did have earnings earlier this morning, right? And they were up decently during the day, dropping a bit in the after hours today as everything seems to be taking a hit after these Meta earnings here. But you will see on the day, guys, they put in a very beautiful day, 0.74% to the upside, and they had a double beat on EPS and beat on revenue. We're going to keep this one short because there's not that much too much to say here about here, but Hilton has been holding a very healthy, steady range up here, guys. Their business is extremely solid and resilient after repositioning the company over the past 5 years here. And you will see, right, Hilton earnings beats estimates on stronger international demand here, right? So here we go. The key insights here. The post-pandemic travel surge in the US is starting to slow, and we've seen that, guys. Even the credit card issuers, we've seen that in Airbnb as well. But bookings at Hilton's international hotels made up for the pullback. So it seems as though the US consumer is not traveling so much inside the US. They are going more abroad because the strong dollar helps them with purchasing power, especially in Europe. Revenue per available room increased 39% in Asia compared to the same period of 2022. Very, very good. Only 3% increase in the US. So you see the consumer pivoting here. Hilton has sought to juice growth by rolling out new brands focused on lower price points, which is good. They created a new brand here called Spark, aimed at economy travelers at the beginning of the year, and has a new lower cost extended stay brand in the works as well. So Hilton doing a very, very good job of pivoting and offering the consumer a more broad experience across their hotels, because the Hilton brand as itself is known as more of a luxury stay place. They also raised their estimates for full year adjusted EPS to slightly higher, and very, very good overall earnings here, guys, right? So Hilton holding up better than most other travel plays here. The airlines have been getting absolutely destroyed, but most of our hotel chains, guys, have been maintaining steady. Hilton is definitely my favorite pure form hotel play at this point. They've performed very, very well. And as they say, as you've seen, guys, the consumer still remains strong. They have pivoted their spending from domestic to international, but continue to spend money on travel and experience. So very, very decent report by Hilton right here, right? So that's pretty much it that we were going to cover on the earnings here today, guys. You will see that tomorrow we obviously have a lot to cover, guys. I will be going over UPS, Amazon, Enphase, and a bit of Chipotle here. They're the main names that I want to cover. And then on Friday, we are going to cover AbbVie here. And we might do a little bit of the oil companies very, very briefly, but you can see another massive earnings week coming to the close here. So let's get into our technicals here for our major indexes, yeah? So SPY down considerably today, guys. We once again flushed our previous lows. So we were saying in previous videos, guys, could the bulls put in enough of a bounce? Unfortunately, not able to get it done, guys. Daily downtrend simply continues as we continue to plunge in this most recent area. We have to zoom out to the weekly. This is a very big weekly downtrend at this point, guys. We are in monthly consolidation now for the third month at this point, but we're coming into a heavy area where we should be getting some support by the bulls. We need to see sellers get exhausted at this point, guys. We need to see our lower time frame RSIs are crushed. We need to see the daily get a bit more crushed down here to low, to the previous, September levels and whatnot. It may entail us pulling lower and lower into the 400 areas. We're going to need to see seller exhaustion, right? It's going to look something like this. The legs are going to get smaller and smaller, and then eventually the bulls are going to be able to engulf one of these moves, and we will look at it at a later time, guys. But now is the time to be building the shopping list once again, as we have been doing over the past 3 months. I've been telling you guys, get your buying power ready and start shopping for some good companies because the discounts are coming. And as you can see, guys, most of all our gains this year has come from big tech. There are so many companies that are at or close to 52-week lows right now. It is very juicy in terms of opportunities for a lot of companies out there, guys. So daily downtrend is maintained by the bears at this point. We need to wait for the seller exhaustion and wait to get an engulfing move by the bulls at that point. then and only then can we start looking for daily uptrend and can we start calling for weekly bottoms. But as of now, the bears are in full control of this daily downtrend at this point. Once again, full control of this weekly downtrend too. And the monthly is just in a monthly pullback scenario. Tons of space above our monthly higher low, 382. I don't think it gets that low, guys. I think we run into a bit of support down here from the bulls in the lower 400s. So let's see how it plays out. Now, QQQ, on the other hand, worst day since February, almost 2.5%, guys. It was absolutely crazy today. Everything selling off in a massive, massive way. Unfortunately, bounce could not get it done. Couldn't even get back above our moving averages here. So we continue to plunge here. Lower lows are in motion here. So daily downtrend confirmed. And the weekly downtrend at this point, guys, simply continues. Our downtrending channel continues to plague the bulls at this point. We are going to be looking out for the lower end of the channel, 244. And if for some reason we flush below this channel right here, the area that I'm watching out for, the air break area, right? Let's say Amazon and Apple do terribly and just drag the rest of our tech stocks down very, very hard to where even on the QQQs, we get daily oversold conditions, guys. It will be down here in the area starting around 335. So keep an eye on that. I would not like to see it get that low, but if it gets that low, guys, expect the bulls to have something to say about it, guys. Just be prepared for it. I'm prepared for it. You guys should be prepared for it as well. Obviously, we can't predict where the markets are going to stop and bottom out. All we can do is look for seller exhaustion. It needs to look something like this. The legs getting smaller and smaller, and then the bulls putting in more and more of an engulfing move to the upside here. That will probably coordinate with when Powell comes out with a commentary on rates here and when the yields stop skyrocketing. But as of now, the bears do control the daily. They control the weekly downtrend as well at this point. And the monthly is still in monthly pullback. It's a good thing that the bulls have tons of space to spare, guys. Anything above 259, which is so far away, is just looking for a monthly higher low. So the long-term time frames, guys, look beautiful. It's just in the short term, there is going to be some pain as long as we can't get some resolution and some confidence that yields have finally peaked. Now let's move on to financials here. So XLF, another very, very brutal day to the downside here, 0.37%. The bounce could not even get a single little leg going here. So the bears remain in full control of this chart, right? So daily downtrend, once again, is maintained by the bears. If they flush this most recent low, 32 pretty much, they will just maintain the daily downtrend and maintain the weekly downtrend as well here, guys. The area that I'm looking out for where the bulls should put up some support is between $31.50 all the way down to $30. That's the area. If I had to put some money on it, which I will if it does come back on it, that is the area that I will be targeting for some support for the bulls. But as of now, guys, bears are in full control, right? They do control this daily downtrend in a very nasty fashion. They control the weekly downtrend as well here. And on the monthly, unfortunately, we are in an extended monthly tightening range here, guys, right? So we are looking for this previous area to act as support on XLF. I've said it time and time again, guys. SPY will not be able to rise without the support of financials and healthcare. So once we get a significant turnaround in financials and healthcare, we will be able to lift these markets even if QQQ is not participating. So keep an eye for this lower area on financials. Going to need to eventually see the bulls put in a daily uptrend. As of now, full bear control. XLV. Healthcare, once again, guys, in the red again, 0.89% to the downside. Healthcare was doing absolutely terribly on the morning and was able to recover a little bit of it intraday, but then selling off into the end of the afternoon, guys. So the bears do maintain full control at this point, right? Daily uptrend is lost. Daily downtrend is now confirmed. Any single bounce, this move is so brutal, guys, that any single move up will just be met by resistance up in this area and will give the bears another attempt at our most recent lows, most likely. So don't expect good things unless the bulls put in a heck of a bounce. Need to see the sellers exhaustion, guys. We're not yet oversold. And even on the weekly, guys, right? Weekly is not exhausted too. We are coming into this area between these two yellow lines that should act as support. And you see, we had a very, very decent bounce into there. So there is some support coming in, guys. You see the volume picking up. Every time we come into this area, the volume does tend to pick up. So there are some buyers down here, but I need the bulls to start putting in more of a move. We had a very beautiful move here, but they were not able to follow through with more than 2 days of follow through here. So I will need to see them start from scratch, set a new daily uptrend. For now, bears in full control of this weekly downtrend, guys. And it's going to become really crucial, guys. If we flush this area and come all the way to 123 here, we won't have many stops left, right? Our 200 weekly moving average is down here at 121.53. You can see That's the true line in the sand level as we maintain this pretty much 2 years worth of a range at this point. So you definitely don't want to see them come down all the way down to these previous lows around the previous 120, 121 levels, guys. But as of now, full bear control. Just need to see the bulls step it up and eventually reverse this, guys, right? So IWM Russell also very negative day, 1.65% to the downside, almost to the bottom side of my sweet spot at this point. I still have not written any options on IWM. I don't want to catch a falling knife on IWM, especially in growth stocks, especially with how the yields are performing, guys. Especially, you know, a lot of these companies aren't profitable and they're running high amounts of debt, and they're also potentially going to share dilution. So a lot of things working against growth companies right now. Very, very negative elements in my opinion. Daily downtrend continues to be confirmed by the bears at this point. Look at this weekly downtrend. Very, very, very aggressive and powerful downtrend, guys. It reminds me pretty much of last April, right? Last April, or you can even go into last September, October. Very, very extended, brutal sell-off, guys, for the past pretty much 6, 7, 8 weeks at this point. We're coming to the lower end of my sweet spot. And then the last line in the sand level, guys, is 158. Why? Because this is the end of the channel, guys. The area that we were struggling in the past to break through as resistance a few times will now be acting as support, right? And we did almost flush our previous level here. 160, our low here was 162.50. All right, we get into the 162s and we are going to flush these previous lows right here. That would bring us to lows not seen in the past 3 years. So very, very notable to us. If you lose this area right here, you'll be losing your monthly tightening range, as well as they will be flushing, potentially due maybe a flush, look below and come back above. That remains to be seen. But IWM Russell definitely not performing too well at all, guys. Gonna have to wait for the sellers to be exhausted here. I need to see a little bit of bullish momentum, give me a daily uptrend to start positioning myself for this. As of now, it's pretty much catching a falling knife in the Russell. Very, very unfortunate to see that. Now moving on to the Dow Jones. Dow Jones also not being spared, guys, down 0.32% again today. So a little bit of a 2-day bounce, just gets eaten back by the bears in one clean shot. So obviously the daily downtrend is pretty much in motion by the bears at this point. Flush these lows right here, and they will consolidate that into a furtherance of your weekly downtrend. So the level to watch here, 32,800. Your next level for continued weekly downtrend, we have a nice little support level down here at 32,600-ish. But after that, guys, if we break through this yellow channel right here, guys, we have to be looking all the way down here, 31,500. And that's a heck of a ways away, if you ask me. Would not like to see them lose that area, guys, because it's been such good monthly support in the past year. It would be really, really a shame to lose this potential monthly uptrend setup here. The bulls really running out of space, guys. Really need to hold this area, because if we start pulling back too much below, it's just taking back too much of the move, and we would have to potentially tighten up this range into the later part of this year, early part of next year as well here, guys. So not looking very good, just looking for seller exhaustion, coming up on a lot of big support levels on all of these indexes. We'll see if the bulls come and play ball, but just not looking good as a whole, guys. There are some very good opportunities on individual stocks, but very, very tough day for the indexes indeed. We're coming close to maximum pain, in my opinion, guys. Now let's move down to big tech, yeah? So starting off with Apple, guys. Apple also not being spared today. Apple down 1.35% again. Apple battling here before its earnings. Apple earnings pretty much next Thursday here. So going to be a very, very big day for Apple, guys. If we flush the 167.70 area, guys, it will be another furtherance of the weekly downtrend here, guys. That is not what you want to see at all on Apple. You wanted to see them hold this whole area, tighten up here, and potentially get a break to the upside. So earnings is going to be the make or break for Apple, in my opinion, guys. We're either going to make our way back up into the 180s and potentially challenge these most recent highs and potentially set up for a new daily trend change to the upside. If we flush to weekly lows, guys, your weekly downtrend simply continues on Apple, just like the indexes, and then your monthly consolidation on Apple will continue as well. Then the support levels really come down into the 150s. We're still in my current sweet spot for now, but earnings is going to be the deciding factor on Apple, in my opinion. It's good, however, that Apple, despite the massive sell-offs here, that Apple was able to relatively hold itself kind of strong here intraday here, but earnings next week is going to be the major factor, so we'll keep a close eye on this one day at a time, as you guys know. Now, AMD with an absolutely brutal sell-off here today, guys. Here, AMD right down to almost $96 coming into my sweet spot. Again, you guys know anything below 100 all the way down to pretty much 82. I know it's a big range, but this is a big buying opportunity for me. Earnings is next pretty much Tuesday here after the close, so we'll see how AMD does, but your daily downtrend is now confirmed by the bears at this point. The weekly uptrend potential reversal is now kind of off the table, guys. The bears have taken back too much of this move, so it remains to be seen with earnings next week. Can we save our previous lows down here at around $94 and really start this rally to the upside, reset a new daily uptrend? Or will we just continue to plunge here, continue this weekly downtrend here, and continue our 5 months at this point of monthly consolidation by AMD? Your monthly higher low all the way down here at $81. Would not like to see them get too close to that, because then it's going to take the bulls a very long time to potentially reverse this here. So AMD, a very, very strong candidate for buys in my opinion, but we need to be patient with this company. It's just not, the stock price is not performing in the way that we would have liked to see. Very, very unfortunate. Bears now in full control of the daily, reassuming control of the weekly as well. Earnings next Tuesday is going to be the deciding factor for this stock, in my opinion. Now let's move on to Amazon. Amazon down 5.5%, guys. Absolutely terrible here as investors kind of get fearful because of Google's cloud earnings. Amazon is also exposed to the cloud. So will they perform well off of earnings tomorrow, or will they be another candidate for another big tech earnings flush to the downside? Earnings tomorrow is going to be absolutely crucial, but bears now in control. Daily downtrend at this point. Amazon losing the weekly uptrend. We're now in a weekly downtrend, guys. Very, very unfortunate. We have not had a weekly downtrend on Amazon since last year. So very, very unfortunate move, if I do say so myself, on Amazon at this point. Your monthly consolidation is underway at this point. Bulls have a lot of space to work with here. Pretty much anything above 89 is just going to be looking for a monthly higher low. But the more that the bulls give up, guys, it's not going to look the best in terms of the speed of the possible recovery, right? So we'll see how they do on earnings tomorrow. Bears in full control of the daily. Bears full control of the weekly at this point, closely approaching my sweet spot. If it comes down from 120 to 110, I will be looking to add some shares of Amazon. So there is a plus side in all this, guys. These companies are coming back to attractive price points where we can pick these up to where valuations make sense and they're providing a very decent opportunity to buy them at, right? So we're going to be looking for oversold conditions. For every which reason earnings really comes down hard into this area, I will be looking to pick up some Amazon here in the lower 115, 110 range. Earnings tomorrow is going to be absolutely crucial for this company. Now let's move on to Google. Google with an absolute terrible day after earnings today, down almost 10% here. Daily downtrend more than confirmed by the bears. Losing a lot of ground here, big gap fill area. On the weekly as well, we've now lost the weekly uptrend, right? So Meta and Google, I'll show you Meta in a bit here, but Google losing the weekly uptrend for the first time as well since last year, right? Weekly downtrend here as well. Well, sorry, it was actually here, September and October of last week. Now we have our first weekly loss of the uptrend here since pretty much the same period of time last year. I do have a position of Google getting assigned at 130 this week, unless we have a heck of a reversal. But if Google for some reason continues to pull back and gets below 120 to 110-ish, I will be adding more shares of Google down in my sweet spot. So once again, Google had kind of run away from us pretty much since June and July, but now approaching once again our sweet spot buy target. So we were going to wait for the seller's exhaustion on Google here. Google bulls need to start everything from scratch. Going to need to have a reset of the daily uptrend, but now the move is so harsh that any bounce is going to be for a lower high under 140 and going to be looking for a potential continuation of the downside until the bulls put a stop to this. A heck of a bounce could translate into a daily uptrend, but at this point, guys, the probabilities do favor the bears for some continuation here. Loss of the weekly uptrend, right? Stopping at our 26 MA. We haven't tagged the 26 EMA, guys, since pretty much like all the way back in March, right? So a lot of things happening on Google at this point, guys. We just need to let this earnings volatility play out. Keep in mind, there is a little bit of a gap fill remaining to be had at the 123, 122 area down here, right? And then we come into our sweet spot in this lower area here, where we do have a decent amount of previous support from June and July, respectively. So we're going to take this one day at a time on Google. So all is not bad. It's offering us a buying opportunity, but definitely a very bad day on Google, losing a bunch of higher time frame control by the bulls. Very unfortunate. Now let's move down to Meta. right? Meta down here all the way to 289. So that's this level on the chart right here. So you can see that Meta is currently approaching our last area of support. Why is this significant to us, guys? Well, we've now lost the daily uptrend. Daily downtrend is confirmed by Meta. They've now erased this beautiful pop to the top early October here. And now the weekly downtrend is very, very, very likely at this point if we flush this little area here. It was a beautiful weekly uptrend, just like Google. And now pretty much in the last few weeks, we've given it up. If we flush our previous low here, right, 287 and close below it here for the week, we will lose this most recent weekly uptrend and we will potentially set up for a weekly downtrend, right? We can always look below and then bounce up higher, and then the bulls can reverse this if they can maintain this little sweet spot of control here, 287 down to 277. But if we lose this, set a lower high, and then flush this whole area, guys, it will not be looking good. Meta will just continue to be in continued monthly consolidation at this point, guys, right? So you need the bulls to put a stop in here if you want to see Meta's ability to recover here in the next 1 to 2 months. If not, it is going to take more and more time for the bulls to recover if we do continue pushing lower and lower, right? So need the bulls to really step it up at this point on Meta, guys. All of these things are being plagued by market uncertainty, by the yields. And I do think that once that goes away, these companies are positioned well. As I said, the earnings were beautiful, but the slight negative guidance by the CFO and the slight hint at the turmoil in the Middle East absolutely sent the stock tumbling as emotions got a better control of traders than actual numbers from the earnings call. Very unfortunate situation by Meta. Keep a very close eye on this situation. Now let's look at Microsoft. Microsoft as well here. Microsoft was up after their earnings 3%, got dragged down in the after hours as well. So Microsoft setting the daily uptrend, one of our few remaining stocks in a daily uptrend due to that earnings. So now any move down below, anything above 324 is just going to be looking for a higher low. Very, very good area here. Previous support, previous resistance is going to be support in this level. We have the moving averages to look out for as well. So it's going to be tough for the bears on Microsoft to flush this, but if the rest of the market doesn't cooperate, don't expect Microsoft to be able to hold this up alone. We are in a daily uptrend, however, and Microsoft has also set the potential weekly uptrend too, right? So even if we do pull back here and lose the daily a bit, we do have a lot of space above 310 to set a weekly higher low for potential continuation. No red flags for Microsoft in my opinion, but if for some reason, guys, over the next few weeks, the market just absolutely falls apart here, we come back down, you guys always know that my sweet spot for Microsoft is between 310 all the way down to 285. So we'll be taking a close look on Microsoft. Microsoft, one of our lead bulls at this point remaining in the market. Now let's move down to NVIDIA. NVIDIA, guys, getting dangerous here. What did I say? 404 down to 400 is the danger zone, guys. We got a nice little 2-day bounce. If we flush these lows here, guys, 409, it'll be daily downtrend confirmed. And then watch out for the 404, guys. If you flush 404, it's going to be weekly downtrend confirmed at this point. Weekly downtrend has not been confirmed on NVIDIA since pretty much August and September of last year when they reversed this and did this, right? So we have not had a weekly downtrend on NVIDIA for the longest time. No earnings to save them in sight, only at the end of November here. So it's very possible if we flush this that we continue trending lower. And at that point, it will be much needed monthly consolidation on NVIDIA. And you guys won't like this target, guys, but the next area of support, since we didn't set much support on this whole way up here, the next area of support is your previous all-time highs all the way down 350 to 340 areas as a first touch, right? So it would look pretty nasty if we did this, guys. NVIDIA would have a heck of a sell-off leading up into it. Obviously, it would present a very decent buying opportunity for everybody who missed it, but it would really suck for people currently holding gains right now and all the movement that the stock has done, right? But things can't go up forever. They do need monthly consolidation as well. So we will keep a very close eye on NVIDIA over the next few days. If they flush this area, guys, weekly downtrend is confirmed here. And then we will just need to wait for the seller's exhaustion because there's really not much support. You have an initial level here at 375, and then look at this massive, massive, massive earnings gap to potentially be filled, right? So close eye on NVIDIA next few days, guys. Now let's move on to our 3 last ones. Tesla as well, right? Falling off pretty much 2% here today, bouncing nicely the last 2 days, but daily downtrend is potentially in motion here. Keep an eye, 202 is your low here. I still have not taken any contracts on Tesla after this extended move down here, right? So we're going to keep a close eye on Tesla over the next few days. Weekly downtrend is in motion on Tesla as well. So keep an eye out for that, guys. We are in my sweet spot, but it is not looking good for the bulls here. I need to see sellers exhaustion and a bit more consolidation before I continue to potentially write puts on this thing, right? So as well, we are looking for a monthly higher low. Anything above 155 will just be your monthly higher low. But as of now, guys, the bears control the daily. They control the weekly as well. So we need to be very careful in this environment, guys. I want Tesla, but I want Tesla as low as I can potentially get it, guys. Under 200 for me would be a very good bargain for Tesla. So that's the area that I'm currently targeting. We need to eventually see the bulls put a stop to this and put in an engulfing move. And I think that that may happen here in the lower 200s here, all the way down to maybe even 190 on Tesla. It pains me to say it after all of this beautiful move to the upside here, but the earnings call was just not good. Still dealing with some post-earnings volatility and market volatility. Now our two last ones here, Palantir and PayPal. Palantir sacrificing the daily uptrend as well. Palantir down 6.31%. Not being saved. You guys know this is a very volatile stock, right? So keep an eye out for it, guys. 1522 is your most recent lower low here, right? So keep an eye on that. If they do flush it, your daily downtrend will simply continue at that point. The weekly, at least the weekly, we have a lot of space. 1376, the area to watch out for. Still in a weekly uptrend, but need the bulls to maintain as much of this room as possible. You're going to need the bulls to eventually reverse this soon. Earnings on Palantir in 2 Thursdays, right? As a matter of fact, or actually it's next Thursday, right? So keep a very close eye, guys. I need them to maintain as much of this space as possible. Maintain this tight before earnings, because I do think earnings for Palantir is going to be very good. It might allow them to recapture a lot of this move. You guys know me on Palantir. I cannot play Palantir unless it's below this area here. I like Palantir. I like it a lot. But for me, it's pretty much $12 to $11. I'm not saying it's going there, but I'm saying that's where I would be a buyer of this stock here. I do think earnings should be pretty good, but you guys have seen companies with good earnings could just end up red. Look at Google. Earnings were good, ends up red because of one business segment. Meta earnings were fantastic, ends up red because of some CFO comments. Tesla earnings were good, and then Elon Musk on the call unfortunately ruins everything, right? So these things can go either way. Keep a very close eye on this area for Palantir, and obviously you don't want to see them lose this 1379, guys. It's been crucial support in the past. And lastly, PayPal, guys. PayPal, again, 5% to the downside. This was actually some news that a payment processor in France guided lower for the remainder of the year. And that company in France that reported this lower guidance today was down, I believe, 39 or 40%. So PayPal down significantly less than that, but did get hit as a byproduct of the news, down 5%, now down almost to $50, guys, 51 and a half. Down so low at this point, guys. We are obviously in my sweet spot, but once again, as I've been saying the last few days, I'm not catching a falling knife. I need to see sellers exhaustion and build somewhat of a base of support eventually for me to be writing some options. Now is not the time to be catching a falling knife. Earnings next Wednesday going to be absolutely crucial for this company. If we get an earnings absolute crush in this situation and comes into the 40s, I will definitely be picking up some PayPal. I think that this is very, very overdone. But you guys know Bears full control of the weekly and Bears also full control of the daily as well as we continue to hit lower lows. As I said, guys, need to see a base of support. Maybe earnings will be the final draw for PayPal to really get all the sellers out of the stock at this point. All of the shorts in profit, taking profit, and there and only then may we potentially find an oversold bottom that we can play off of, guys. All right. So that's pretty much all for the stocks, guys. I hope you enjoyed the video. If you did like the video, I hope I didn't sound too bearish, guys. That's not my intent. We are short-term bearish here because of the yields, because of the situation in the Middle East. We need a bunch of this uncertainty to come out of the markets. All these companies, guys, are positioned well. The statistics, right? Almost 80% of all companies have reported, and 75% of all companies who have reported have beat on earnings or EPS or both. It's been a very positive earnings season. It's just the tone. The tone in the market right now is very market. Fear and greed is once again very fearful, guys. It's a time to be buying. I know it's so hard to be buying right now, guys, but we have to rewire our brains and take these discounts because I guarantee you when the markets are higher in the next 6, 9, 12 months, guys, we will be kicking ourselves for not buying enough of these beautiful companies that have beautiful earnings, beautiful free cash flows, amazing margins. We need to be picking these things up when the markets are bleeding and people are fearful. So just remember that, guys, okay? We are long-term bullish here. So if you enjoyed the video, consider liking the video. I really appreciate it. And also, if you're new here, consider subscribing to the channel. We'd love to have you here. Thank you so much again for 400 subscribers, guys. The channel is growing and I absolutely love it. And as usual, if you have any questions, guys, macro, options, companies, leave it down in the comments, guys, and I'll be happy to answer you. So I'll see you guys all tomorrow after the close, right? Futures are down today. We'll see if we have another red day. Big day tomorrow for earnings. A lot of companies we will cover, guys. So take care. See you guys after the close, and peace.